Jason, I am a gamer. I really only play sports games, though. I have a PS5, so you had me digging deep into the blogs on this one. I want to ask you about your call when it comes to Take-Two. It seems to hinge on the idea that Grand Theft Auto is going to be released this year, but I'm seeing more and more reports that it may not. So how important is that to your price target and your call when it comes to Take-Two?
Well, I would say it's integral. I mean, the thesis is that this game will be released this year. Having said that, if you go back and you look at what has happened to Take-Two stock when they've delayed other games, you take sort of a tactical hit for sure, but the stock tends to rally right back. And so even if they came out and they said they're delaying this game, I'm not sure that it wouldn't end up being a good performer for this year, even though you'd sort of suffer a little bit of downside in the interim.
Overall, when we look at the media landscape, where are you seeing the best picks, the best storylines? Obviously, there's big shifts in media, not only from things like AI, but the addition of ads in some areas, and also just consumer behavior changing quite a bit.
Yeah, I would just, well, the big shifts obviously are on the streaming video side and then streaming music. And I would say the consensus on the buy side right now is everyone loves names like Netflix and Spotify. What we're trying to do here is say, look, here's a name that didn't really perform that well last year that is a much bigger potential catalyst coming up. And I think maybe another catalyst in 26, potentially with the release of Red Dead. So this seems a little bit off the beaten path as opposed to just playing the consensus, which is, go long Netflix, go long Spotify.
Fair enough. As we look into 2025, a lot of talk about the M&A picture being a lot more attractive for a lot of different companies. You're identifying one company that's seen a big run up in recent days on reports that it might be acquired. Vivid Seats, looking at the charts right here, up double digits over the last just few days since December the 30th. On speculation, it might be taken over. Who, in your mind, would see this as an attractive takeover target, and what does it bring to the acquirer?
Yeah, I mean, looking at the market shares, I think it might be difficult from the strategic standpoint, but if you look at their balance sheet and cash flow, it makes a lot of sense for private equity. So that would be the most likely buyer, in my view, for Vivid.
Okay. One other thing that you're looking at is something that actually impacts our company here at CNBC. You're saying that you see some possible upside to basically a cable combination between Comcast spinoff, which includes CNBC, MSNBC, and also Warner Brothers Discovery and their cable networks, which include things like TNT and TBS. In your mind, what is the upside of a possible combination?
Well, it's essentially just realizing the sum of the parts embedded inside Warner Brothers, which the market has ignored. I mean, if we end up seeing sort of a pure play cable net business that probably wouldn't have a lot of debt on it and would be facing some top line pressures, that would attract sort of the value investor. Then for the balance of Comcast that has the theme park business, they would benefit from the IP of Warner Brothers, the studio, and then putting their two streaming apps together, both Max and Peacock. And so I think it just makes a lot of sense for both sides. But really the stock call for us is for Warner Brothers just realizing the sum of the parts value.